So welcome back, my dear students. Welcome back, everyone. And this is the second video in the accounting. Still, we are talking about why accounting is important. And actually, I don't want to make the videos very long, so I just so you take both of them in one lecture. Why is accounting important? Still, we are talking about the financial statements, like we said before. These are reports that summarize the financial situation or performance of the business. These reports indicate the business economic health. Annual reports, financial statements are presented to shareholders and potential investors in the form of annual reports. An information system. What the information system? What financial questions might you have about your business? Is the business earning profits or selling prices to go high or low? How much does ABC company owe me? What is the value of the inventory? How much did John Smith, as example, earn last year? What do we have enough money to pay our bills or no? So these all are questions. The accounting system, by the help of the information system, can answer these questions. The accounting system, by the help of the information system, can answer these questions. So information system is helping also the accounting system. Still, we are talking about the information system and some examples of the questions of the information system, like who else may want financial information about the business, government, bankers, lenders, potential investors, lawyers. This also, all these parties, it's not only the stakeholders who will need financial information, but we have also a lot of parties that will also a lot of parties that they need the financial information. As example, like the bankers, the governments, the lenders, the potential investors, and the lawyers. Those are all some of the other users of the financial information as well. Some of the other users of the financial information as well. Okay. Now, owning a business. This is another part right now. Owning a business. If you decide to operate your own business, you will find yourself facing such accounting tasks. As example, here we talk now about the accounting tasks. What are the accounting tasks which you want? Banking, payroll, keeping track of amounts owned by the customers, keeping track of amounts owed to the government, producing an income statement for income taxes. So all this, when you own a business, you need also accounting system. When you own a business, it's not only the companies, even a sole proprietorship, they need also accounting system. Okay. So here we go, the financials owning a business. So when you have a business, any small business even, you need accounting system so that you can record your transactions, know how much you did profits this year, and so on. Categories of account work. The accounting work is divided into many categories. What are those categories? Routine daily activities, processing bills, preparing checks, daily banking, recording transactions, preparing business papers, periodic accounting activities. So those activities occur at regular intervals. Paychecks, like bi-weekly, as example, if you are working like you guys are working now, you take your paycheck bi-weekly. I am working in the college, I take bi-weekly payment. Bank accounts, balanced monthly. So yeah, they need to send you the bank accounts as well. And this is every month you will receive a letter from the bank, a financial reports like monthly, quarterly, yearly, income tax returns, which is yearly. So the financial reports might be monthly, quarterly. Quarterly means every 3 months. yearly every 12 months. But the income tax return is every 12 months, which is every 1 year. So again, I'm saying the categories of accounting work. The categories of accounting work like routine daily activities, processing bills, preparing checks, daily banking, recording transactions, preparing the periodic accounting activities, and the pay checks as well. And also the balances like the balance sheet, which is done annually, and the income tax return, which is done annually as well. The miscellaneous expenses, like pencils, pens, coffee, tea, small amounts of money, but we have to register them as well. You bought notebooks, you bought pens, or this all under this word miscellaneous. Employee resignation. So also for a person or an employee, when he come to be resigned, to calculate his pension and to calculate the deductions and what he owe and what he has. Those are the points of here. Yeah. Okay. Miscellaneous activities, employees resignation, advertisement is prepared, new capital equipment is purchased, a new loan, a new employee is hired. All these also accounting work. So those are examples also for accounting work. Miscellaneous activities, employees resignation, and advertisement is prepared, new capital investments, new loan, new employee is hired. All these are examples also for the accounting system. So we have a question here, but we'll come to it back about who will use the accounting systems or why accounting systems. Still we are talking about why accounting systems is of a vital importance. Okay. The fundamentals accounting equation states that assets will equal liabilities equals owner equity, or assets will equal liabilities plus owner's equity. And actually, this one, I just want to focus here on this one. I just want to focus here on this one. Assets will equal liabilities plus owner's equity. This is very important. Assets will equal liabilities plus owner's equity. This is very important, actually. So we'll focus on this one here, on this equilibrium. Assets will equal liabilities plus owner's equity. What is the assets? Assets is anything that the business owns that has values. What are some examples? So assets, in one other word, is values. Assets is values. What are some examples of the personal assets, like your car, your house, your cash, those all are assets. So assets is anything that you have it, own it, and it has a value, a money value, has a money value. We call it assets. Okay. What about the liabilities? Liabilities is anything that the business owes. So it's against me. Something is not. So any debts, money that I have to pay to the other people. Debts means, or debts means money I should pay to the other people. What are some examples of personal liabilities? Like what? Like the credit line. These are money you have to pay. So we call it liabilities. Money you have to pay. You owe this money. You still have to pay this money. You have to pay to the others. Mortgage. You have to pay the mortgage to the bank. Owed to parents. What you have what you have to pay to your parents, credit cards, and so on. So this is, we call it liabilities. But of course, owed to parents, it will never be shown up in a budget. This is only to show you what do we mean by the liabilities. Liabilities means commitments, things you have to do, commitments. Okay, what about the owner's equity? What about the owner's equity? So owner's equity is also referred to as capital. So the word owner equity, let me make it in red, and here I will make it in red, and here this word owner's equity in red. I don't know why it doesn't want to make in red. It's okay. So owner's equity means capital. So what do we mean by the capital? The owner's equity. Okay. It is the difference between the total assets and the total liabilities of a business. So it is the difference between the total assets and the total liabilities of any business. So owner's equity will equals the assets minus the liabilities. That's the meaning of it. Owner's equity will equals the assets minus the liabilities. So like I say here, you can see here, if I want to take the owner's equity alone, I will leave it here alone, and I will take the liabilities the other side with changing the signal. So it will be assets minus liabilities. Owner's equity will equal assets minus liabilities. So assets will equal liabilities plus owner's equity. Assets will equal liabilities plus owner's equity. But owner's equity alone, take the liabilities the other side and it change the signal. So it will be assets minus liabilities will equal the owner equity. I will make it on the other side here so that you guys can see it. So if we say, guys, if we say now this is, we have the accounting equation, we call it the accounting equation like this. Let's go back one line. Okay. Now, I want the owner's equity alone. So I will take the liabilities the other side, but the liabilities here was positive. Then when I take it away, the other side, I pass the equals, then it will be negative. So owner's equities will equals liabilities, assets minus liabilities. Owner equity will equals assets minus liabilities. Again, I will do that. Again, I will do that. It's originally like this way. We call it the accounting equation. It's originally by that way. We call it accounting equation. Okay. So what I want to do is just the owner equity, how much it will equal. I will take the liabilities the other side here. Once I move from the positive and I stepped this the equation mark, that means the positive will be negative. So assets were there already. So the liabilities came from here, and it will come with a signal of minus instead of positive. So that means that the owner's equity now equals assets minus liabilities. We can put this also the other side here, and this is the equation here. So owner's equities will equal assets minus liabilities. Same thing we said before. So here, this was a declaration only. So also you can say liabilities will equal assets minus owner's equity. Liabilities will equal assets, that side, minus, you take the owner's equity the other side here, with change in the positive will be negative. So liabilities will equals assets minus owner's equity. And this is another part of the lecture. Okay. We talk about the assets, the definition of the assets, and we talk about the definition of the liabilities, and we talk about the owner's equity, which is a capital. We said owner's equity is a capital, and it's the difference between assets minus liabilities will give me owner's equity. Okay, I'll stop here now for the moment, and I will go for some questions for what we're doing right now, and I will say here, define assets. This is this is question number 4 today. This is question number 1. This is question number 2. This is question number 3. This is question number 4. So I would say define assets. Then define, second question is define liabilities. Control and C. Control and V. Define liabilities. Here is define liabilities. Control and C. Control and V. And I will take these questions of today. I'll put them down here alone. So define assets, define. Then the third thing is define owner's equity. Control and C. And I will get here now to 5. Define owner's equity. And these are my 3 questions for today. Define assets, define liabilities, define owner's equity. So I will stop here now for a few minutes to get the answer of these questions. I will stop here for a few minutes to get the answer of these questions. This is very important questions today, my dears. So please work on it. Defined assets, defined liabilities, define owner's equity, define owner's equity. Here are the 3 questions of our own. So please work on it. And that's what we said today. Just let me go back to it and tell you in brief again, what do we mean by assets and what's the meaning of liabilities? So assets, anything that value you own the assets, you own the assets, like the house, the car, the cash, all these are assets. Liabilities, a commitment against you. You have to pay the liabilities that you have to pay. Any debts of business. What are some examples of the personal liabilities like credit line, mortgage, all this you have to pay. What you have to pay to your parents, you borrow from your parents, so you have to pay for them back, or credit cards. This is liabilities. And we said that the owner's equity will equal the assets minus the liabilities. Total assets, okay. The difference between assets and liabilities, that means the total assets minus the owner's equity will equal assets minus liabilities. This is the meaning of it. Will equal the assets minus the liabilities, like I told you before. So these are the 3 questions which we have today. And I will give you a chance, please, a time to answer these questions. Define assets. Here is the first question. Define liabilities, the second question. And define owner's equity. Here is the third question. Shall leave you about 5 minutes here for getting your answers back. Thank you so much. Okay, my dears, we are back. Thank you so much. We are back. Just remember today we have 3 questions. I hope that you guys answer the 3 questions right now. The first question, define assets, define liabilities, and define owner's equity. Those are the 3 questions. And what the accounting equation also, the accounting equation, discuss the accounting equation, which means that the capitals of or owner's equity, like we said here, I will just make it easy for you, that owner's equities will equals assets minus liabilities, or the capital will equals the assets minus the, because we said owner's equity means you can say another word which is capital. So capital or owner's equity. Capital or owner's equity are the same. 2 words with the same meaning. Capital means the owner's equity. So I shall leave you now for the moment. Thank you so much for listening to me. We had here today those questions, definition of the assets, definition of the liabilities, and the definition of the owner's equity. And we had also the accounting equation, which, like I told you, means that capital or owner's equity will equal the assets minus the liabilities. Shall leave you in peace. Take care of yourself. Have a very wonderful night, everybody, and shall see you in the next video. Thank you so much. Stay safe. Bye-bye, everyone. Bye-bye.